Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. Once again on the program, as always, I have the genius of this whole operation, Mr. Al Connickson. Al, how the heck you doing?
You know what? I am feeling fantastic. How about you, Josh?
I'm doing really good. You almost thought I was going to bring back that Tribbiani again, didn't you?
I'm waiting for it.
How you
It's
doing?
our buddy.
It's always great to be back, helping our Retire Young family make those better investing decisions. Al, we have another jam-packed show today. We had another great opportunity in these markets this past week. Dow is continuing to try to get that to that all-time high, just like the S&P and the NASDAQ. We're going to talk a lot about retirement today. We have a retirement crisis. We were talking about that last week. And we've been really on a mission to improve financial literacy worldwide. So as we get into the show here today, I want to talk a lot about that retirement, but we're also seeing some great opportunities in these other assets. The dollar is continuing to drop. Silver and gold, they're still pretty strong out there. Al, what's going on with these markets? How can us as average investors really start to capitalize in these phenomenal opportunities?
Yeah, the market has been phenomenal. We still have a lot of economic questions that need to be resolved, but the market just seems to only want to go one direction. It almost forgot that it can go backwards, it can go down, or go sideways. August was a fantastic month. We just closed out August. It was the best August that the Dow and the S&P had seen since the 1980s, over 30 years, and the NASDAQ since 2000. So this was a phenomenal month. Dow was up 7.6%, the S&P 7%, and the NASDAQ 9.6%. Oftentimes, that's indicative of a good full year, not just 1 month. Yeah. So there's been some great opportunities out there, but don't think that because you didn't participate, if you didn't, that it's all over, that there aren't more opportunities. As long as the market's open, there will be opportunities. What we're seeing, Josh, though, is a lot of students that are coming in that did participate are saying, I don't understand. The markets have done really well, but my accounts are down.
Yeah, that's the problem.
And a lot of people are pretty angry about that, and they want to know why. It doesn't seem to make sense to them. Why? And they want to know why some people win consistently, some people lose consistently. And it's obvious that somebody's doing something different. If somebody is profiting on a consistent basis, and the ironic thing is that oftentimes they're guiding their clients to do something different than they're doing, that which really doesn't seem to make sense. So we always say, do what they do what the smart money does, not what they say. And, so regardless of whether you're in the markets now, you were recently in and maybe left and you're sitting on the sidelines, or you're thinking about getting in, it's critical to understand what that difference is and then adopt the mindset and the action of those that we call the smart money. And there are a number of things that they do have different. One is an edge, and everybody should have an edge in their trading and investing. What the smart money, the Wall Street institutions, the pros, their edge really is knowing or having a much better idea what the true value of something is, whether it's the individual stocks or the market. And how do they have that edge? Well, they spend millions, tens of millions of dollars every year on data and research that we don't get, in equipment that we can't afford. But that's okay. We don't need to have those things. We don't need to know why they're doing something. We just need to know that they are and then follow them. That's your edge. Our students' edge is being able to, with a high degree of accuracy, follow or copy what the smart money is doing.
So, Al, you talk about this edge. I mean, we know the smart money, they're controlling the market, but, how can us as investors, what are some of the concepts and techniques that we can do kind of like them?
Well, that's what our education is built around. It's built around a patented investment strategy that is designed basically to not only follow what the institutions are doing, but look forward and allow our students to be prepared to take advantage of what the smart money is going to do at some point in the future. How do you do that? Well, that's what our strategy does. And in the classes that you're going to be talking about, we go over that. But basically, it is taking advantage of one thing that just simply cannot be argued, and that is supply and demand.
Correct.
And in the financial markets, that's buyers and sellers. And what we really need to look at is when institutions, when big players that have maybe hundreds of millions or trillions of dollars to invest, when they're taking a position or exiting a position, they do it with enough clout, enough financial clout to move the price. And the key is to be able to, as closely as possible, identify when market prices turn, because that's where the best trades, the most high quality trades are resting or residing. And when we talk about a quality trade, and this is really what I think everybody should aspire to, is a low risk entry with a high profit potential and a high probability of succeeding. I mean, those three things, if you can master those three things, it's going to make a huge difference in your performance. And how do you do that? You identify initially where a big move has been made by an institution. And the truth is that they can't get all of their orders filled at one time. They have to do it in increments. But they also, since they know what the true value is of anything that they're investing in, they can wait. They have the patience to wait until the price comes down to a level that they are willing to buy a particular position or sell a particular position. Our goal with our students is to have them identify that beforehand, so they're already ready. Their trade is already set. So actually let the institutions and the big players come in and provide a profit.
Well, that's the key, is just really to become proactive rather than reactive. And I'm glad you mentioned that at the beginning there. You know, we've had the best August in many, many years. And the problem is, and we're seeing a disconnect with people that are coming, that are investing, is they're not seeing the same things in their accounts. So you have to have that edge. And you said something very interesting. People are thinking about getting in, in investing
right.
or starting something. Thinking about it isn't going to get you anywhere. It takes a little bit of action. And a lot of people think, well, how do I compete with these big institutions, the smart money? Well, you don't. You want to trade like them. And Al, you talk a lot about how the smart money is trading and investing, but also how supply and demand works in the financial markets and how us as investors can trade like those institutions based off supply and demand and with low risk, high reward, high probability entry points into these markets. Al, coming up in the next segment, we have a lot of listeners that want to understand how the smart money is creating income, but why it's so important to start right now. This is Josh and Al with the Retire Young radio show. We will be right back.